Hello, everybody. This is Patrick MontesDeOca with the weekly podcast for March 9, 2022. President Biden implemented a ban on crude oil imports from Russia, which caused crude to hit 130.50. It is a bit of a buy the rumor and sell the fact, since crude has appeared to put on in the top at 130.50. It remains to be seen the level of buy and demand with Russian crude oil now cut off the market. Prices for gas are rising fast, which is about $4 a gallon in the US. Nickel has gone through the roof as a consequence of supply issues related to the Russian invasion of Ukraine. Russia produces about 30% of the world's grain, and it is a major oil and gas producer. Southwest Ukraine produces large amounts of natural gas and oil. Equity Management Academy CEO Patrick MontesDeOca said the war, to a degree, is a war over oil and gas. End of quote. Green energy and other possible energy sources cannot, at this point, replace crude oil. The war has made it clear that crude oil continues to play a critical role in the global economy. The Western sanctions are breaking the back of the Russian economy. One issue is whether the oil embargo will spread to other commodities, which could further harm the economy, since so many commodities are already in short supply, and we have inflation at 40-year highs. Interest rates remain negative in relation to inflation. The situation is putting great pressure on the Fed to increase interest rates. The 10-year note has reverted back up to about 191. And we are watching the 10-year note and bonds to watch for any signs of stagflation or inflation. Yesterday, the 10-year note hit 187 and then ran back up to 191. It was at 135 a few months ago. If we hit 2.5 yield on the 10-year note, it will be an inverted curve, and it will be a sign a recession is underway. The cost of money appears to be going up. Wheat has exploded from in March of last year to 1363 yesterday, March 8, 2022. We are getting a bit of a pullback here today. Corn is out. To 72. Soybeans have a high of 79. The market is afraid there will be issues with supply. They are a major part of the global economy, and if Russia and Ukraine can't export, supply will have to come from the Americas, which are experiencing droughts. The invasion on top of supply issues, drought, inflation, MontesDeOca said, are all just going to drive commodity prices higher. What Putin does not, what he does next is unpredictable. which will only make the global economy even more fragile with inflation, supply chain disruptions, and rising tensions between the US and China. For today, March 9th, 2022. It's a mixed market. Fundamentally, we have some crypto regulation being discussed as a priority issue. We have a strong market in digital currencies such as Bitcoin at about 42,330. The recent high was 45,455. On March the 2nd, 2022. It then reverted down to 37,180 on the 7th, and now we're back up again. There is tremendous volatility, but a lot of buyers took advantage of this correction. We are not trading above the variable changing price momentum indicator, the VCPMI weekly average price of 40,673. We are also above the daily sell-to level of 40,547, which indicates that the market has broken out of the daily resistance level. The weekly has activated a weekly bullish price momentum with a target of 48,923. The sell one level is 44,142, which is the other target for the rest of the week. Let's take a look. Gold hit 2,078 yesterday, shattering the previous high pretty close that we made in 2020. The targets for the week were 2003 and 2030, which were met. We published a report on September the 9th of 2020 that essentially anticipated the seasonal low. This report published, which forecasted basically the targets for the coming 12 months to be basically the 9-month moving average was 1794, and the annual average was 1880. And I wanted to share this. This is a private trading room here throughout today, where I post and share my actual trades, which I execute here, and alert all my traders in terms of what we do in here. And it's first-hand information that we provide, basically, which is real-time information for trading, for real traders, for active traders. And I share basically quite a bit of information that we publish. If you look at my Seeking Alpha profile, basically, or my Associated Press profile, or if you get a chance, you would like to come in here and have a trial for the room, you can see pretty much all the posts that we make for the benefit of our traders, for the benefit of our subscribers. On this report, we anticipated the high to be of 2003 to 2,271 for the gold market. And getting up to the targets, obviously, of 2003, 2030, it completed the pattern. When the targets are completed, basically the algorithm goes neutral. The annual average was 1840, so we came into that into the year, the beginning of this year, with a bearish trend and a bearish price momentum with that trend. And it also told us that if we were to close above 1840, that it would activate basically the annual bullish price momentum. And we came in here at the beginning of January 28, basically making a low of about 1790, 1780, 60, which was the annual low from the previous seasonal low that we anticipated here on September 28. This is the bottom of the seasonal pattern that we are using, the measurement that we're using. And when the market was down here, it anticipated basically a rally to about 2003 to 2,271 using the annual numbers. So it appears that as we came in, the market penetrating through this level here, meeting the targets, it has completed. The first target was accomplished yesterday, March 8, 2022. Yesterday, the market entered into an area of supply nearing the monthly resistance levels. And it found supply at that level, and the sellers came into the market. The price came down below the daily average price into the weekly targets. Of 2003 and 2030 that were completed. We are on a daily bearish price momentum. We made a low of 1981. This is an area on the daily, which is a level of support. On the weekly, 2003 is still the bearish target. If you are long, consider taking profits initially at 2003 if you're trading short term through 2030. We have a bit of a mixed picture here, as the weekly is pretty much harmonically aligned with the daily numbers on a contrarian basis. So it's a bit of a choppy signal. And we have a bit of a mixed picture as the market tries to define the weekly trend compared to the daily trend. And we suggested earlier that to be prepared to enter the long side of gold at 2003. So closing about 2003 activates a buy trigger. And if you do enter that trade, we recommend using a max dollar stop based on your profile, something that you're comfortable with. And you can initially have the target of 2030, which is the second target, at 2041, which is the daily. We are in an area of strong support. And if you want to add to your position, this is an area in which to buy gold.